Hi, my fellow Americans. Thank you for tuning in, investing some time with me. I'm Brant Speshart with Steward Wealth Strategies, and I just want to provide a quick recap today of this great piece called Elections Come and Go. There's a copy of it you can download and read at your own discretion attached to this email, but I just wanted to highlight a few things because it's really important to make sure that we're making wise decisions and not knee-jerk reactions in what is probably going to be a pretty volatile year with a lot of headlines trying to get our attention for us in 2024. So, this is a recap of presidential election cycles and how they have affected particular investment over the past 90 some years. This particular investment I'm going to talk about is Investment Company of America. It is actually an investment in a lot of clients' portfolios. It's managed by Capital Group American Funds. It's one of the older mutual funds out there dating back to the 30s, and it's primarily invested in large American companies, the great companies of America. And I thought this would be a really good piece to share with you so that you can take a step back and look at historical data so that you can make calculated decisions when it comes to your finances and investment strategies. You have to focus on the long term. We at Steward Wealth Strategies focus on the long term. Investor doubts may seem especially prevalent during presidential election years when campaigns spotlight the country's challenges. Yet, even with election year rhetoric amplifying the negative, it's important to focus on your vision for the future. So keep in mind the following: successful long-term investors stay the course and rely on time rather than timing. How many times have you heard us say this? Investment success has depended more on the strength and resilience of the American economy than on which candidate or party holds office. You're investing in the great companies of America. You're not investing in a political office. And the managers, the money managers behind the scenes that run these ETFs, that run these mutual funds, that run these index funds, their experience and time-tested process as an investment manager, that can be an important contributor to your long-term investor success. But we have to remember there have always been major headlines. There have always been tumultuous events. Market declines and recessions are not new. Pandemics and other outbreaks are not new. Weather-related calamities are not new. Labor market struggles always been headlines. Civil unrest and protests have always been headlines. And geopolitical conflicts and war have always been headlines. So negative headlines going for our attention have always been around. And also, they know that fear is the dominant human emotion, and that sometimes drives people to make decisions whether they're in your best interest or not. So if we look at this one particular Investment Company America, again, this investment mutual fund has been around since 1934. It's one of the oldest funds out there. It's one of the largest funds out there, but it's a great example because it invests in large American companies, invest in the great companies of America. And what this piece does is it looks at every election going back to the mid 30s and looks at how this particular investment did for 10 years after that president was elected. Now, like I'm not necessarily going to base my investment decisions on what happened in the 30s, in the 40s, in the 50s, and the 60s. I want to kind of be a little bit more relevant, a little bit more recent. So let's look at this going back to, over the past 50 years. So if you go back to 1972 when Richard Nixon won, this fund averaged for the next 10 years 8.7%. Now, I've heard a lot of folks talk about the Jimmy Carter era as far as the economy was concerned, but guess what? This investment for the next 10 years following Jimmy Carter's election was averaged 17.2%. In 1980, when Ronald Reagan won, the fund averaged for the next 10 years 18.3%. 84, when he got reelected, averaged 15.3% for the next 10 years. In 1988, when George H.W. Bush was elected, fund averaged 16.5%. What about Bill Clinton in 1992 and 1996? 13.3 and 11.0. George W. Bush, 2.7%. That 10-year period from 2000 to 2010 has been coined the lost decade. It's one of the worst decades in the stock market since the Great Depression, but averaged 2.7%. When George W. got reelected in 2004, averaged 7.4%. Barack Obama getting elected in 2008, averaged 7.9%. And in 2012, with Barack Obama being reelected, 14.7% average rate of return. Now, there have been a couple elections since then, but they don't have 10-year track records to measure. What we were doing is looking at the presidential elections over the past 50 years and how is this particular investment done for 10 years after that election. Now, just to give some long-term historical reference, if you go back to when this investment was originally started, inflation since 1934, it's been about 3.6%. It's been pretty heavy here recently, but 3.6% is about average inflation. The S&P 500, if you include dividends reinvested over that same time period, averaged about 10.8%, and this particular fund averaged about 12.1%. But what's interesting is a lot of times we hear, hey, who's better for the market, a Republican or a Democrat? You know, red, blue, and you, beliefs about which political party is best for the market might discourage you from investing. But as you can see from the chart, whether a Republican or a Democrat claims victory hasn't been a deciding factor. This chart right here looks at how $10,000 has grown for 10 years after that election happened, and 20 of the 20 10-year periods, you had a positive return. In 18 of the 10 of those 20, or in 18 of the 20 10-year periods, you actually doubled your investment. So every time we look at this particular investment for 10 years after one of these elections, there was growth, and in 18 of 20 of the times, portfolio doubled. So thank you for tuning in. Please download and read this article. If you'd like more information, reach out to our office. But regardless of who wins, we know there's going to be a lot of headlines this year. Stay the course, focus on the long term, and try not to let headlines cause knee-jerk reactions. It's time in the market, not timing the market, that truly makes a difference. If you have questions, if you have concerns, please reach out to your wealth manager here at Steward Wealth Strategies. We are honored to serve you, but our job is to help serve you. We're here to be a sounding board and answer questions or just talk through scenarios or situations with you. We're truly blessed and honored to have you as a client, and thank you for trusting us. God bless you, and please let us know if we can help you. Thank you.